Hey, good morning, everyone. Marty Missouri here, 4th of September, Wednesday, 2019, with your pre-market update. Going to quickly run through just a few charts with you and just keep you for a few minutes this morning. I'll just start with our S&P futures chart. We've been following the market up in here. I said this was on the notion that we'd get a delay in tariffs over the weekend. Didn't get that big drop yesterday. Overnight, however, unrelated to the U.S.-China trade dispute, the Hong Kong government finally conceded and completely withdrew the extradition bill that really got things started in Hong Kong now that's been going on for weeks and weeks. The protests that at times have turned quite violent. That really sparked a rally in global equities overnight. Also, news yesterday out of the UK when in a dramatic fashion, one of the members of Boris Johnson's party defected while he was about to give a speech, and essentially relinquishing majority for his party really puts the whole notion of a hard no deal Brexit in question. The pound rallied. I'm going to show you that here in a second. European equities pretty much across the board have been rallying. Also, good news for markets out of Italy. Looks like recent events have allowed for a forming of a new coalition government, believe it or not, in Italy, a government that would be more business friendly and more EU friendly. And so European markets are rallying hard this morning. So again, no news on the US-China trade front to really trade on or rally on, but a number of other items that have been concerns for the markets. We've talked about off and on in here on the blog, particularly Brexit of late. No solutions to any of it yet. In terms of Hong Kong, they had 5 demands. One thing that the government said is that we're definitely conceding on this one, words to that effect, and we want an open dialogue, but it will be, let's say, a stretch to get to basically be able to concede on all of the other 4. Also, brings to mind out of China overnight was a lessening of bank reserve requirements. Now, China has a huge event, biggest event of the year on October 1st. It's National People's Congress. It's a 10-day, basically, it's an extravaganza. And it's a very important meeting for them. The Chinese government is notorious for calming waters ahead of big public events like this, although the withdrawing of the extradition bill, that had to happen anyway, regardless of this coming up. Also, the fixing that they do every night, they set the mid price for the yuan and the dollar, and they control it within a range of 2% above below that fixing, as they call it. The market seems braced for China to devalue, to really weaken the yuan any night now to offset the effect of tariffs. Now, it is weaker than it's been in 10 years, and it's been consistently weaker each night. Last night, though, they barely budged it. It was substantially below expectations. And they've been below expectations for like 8 nights in a row. So the market or traders might view that as them being somewhat conciliatory toward the US. I see it quite differently. It simply is China messaging foreign investors that they don't need to worry about a big devaluation and then losing a lot of money on the currency in the process. And then, of course, that would force them to just exit China in a hurry. At no time would they want that to happen, let alone a month before the People's National Congress. So China's going to do all they can over the next month to keep the waters calm. Whether or not they're ultimately going to agree to meet in September, as the U.S. keeps saying they're going to, that seems to be not on the table, or it's not scheduled yet. I don't know how they're going to treat that. I think if we do hear that they're coming and there's a date, that's probably going to be good for pretty nice rally in stocks. I can tell you this: when you look under the surface and you look at the issues that both sides seem to be committed to, there is no solution with these commitments made on either side. So there's going to have to be some give and on either side or on both sides, and it doesn't appear that this is going to come to any solution anytime soon. So look for the trade war to continue to spark a great deal of volatility. So just quickly, I'll come back to the futures chart, but take a look at the Hang Seng Index. Here is the Hong Kong Index last night when that was announced about the extradition bill being withdrawn. Huge rallies, like a 4% pop. And make no mistake, that took global equities and futures right along with it. So big positive mood there. Again, it'll be interesting to see what the protesters do with this, if there is a calming or if they're just going to say, great, we got one down, four to go. So we'll see. As for what I said about Brexit, take a look at the pound. This was yesterday, in that Parliament session when the odds of a no-deal Brexit began to wane. You can see what the pound did then, and it's just picking up where it left off here this morning. And then a quick look at the Italian stock market. Again, what I said about the Italian government, new coalition, more market and European Union friendly. Look at the big move here last night and this morning in the Italian equity index. So that's a big deal. European stocks, of course, across the board are rallying this morning on this news, on the news regarding Brexit, and of course the Asian news, which has rippled across all waters and so forth. So again, a real, as they say, risk on rally today. Again, we're seeing it in US futures. And I want to wrap up just by getting a little closer to the action here with the hourly chart. And here we are once again pushing right up against that 61.8% retracement level. You can see right from the get-go, after this big decline, we've come up and tested this level time and time and time again. And here we are, here we are once again on the hourly chart giving it a go. As I keep saying, make no mistakes. There are a lot of shorts in here who have been winning this battle over and over and over again. We get something that would bring some momentum in here. For example, if today China said, okay, we're coming on September 15th, boom, we get a rally in here, you get some short covering, and I think we're going to be looking at higher levels. Or something else, something that, a tweet or something that exacerbates the issue. The good news that I've shared with you this morning will be quickly forgotten if it looks like we're going to get more of an escalation in the US-China trade war. You'll see stocks roll over and we'll have that waterfall selling that I talked about yesterday. So again, folks, this can go in either direction. There is a lot of under the surface fundamental and technical damage that's going to have to be repaired before you start hearing anything from me that's going to sound like we have the reason to be optimistic about a sustainable move. But absolutely, we can and will see lots of volatility in both directions in the meantime. Thanks as always for watching and listening. Take care.